Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 28, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Leading into a 3-day holiday weekend, we've been talking about this all week in these videos, in the live trading room. It's unlikely, although it does happen, but it's unlikely that they pull the rug out or hit the market real hard leading into end of month, end of quarter, leading into a 3-day holiday weekend. So what did they do? In the end, they floated them up into the 3-day holiday weekend, poked their head above a new high today in the spiders, finished not at a new high, but they still floated them up into the 3-day holiday weekend. We'll give it a funny how that works. The main thing is the trend is your friend until something changes. She's in a very firm, strong uptrend. There's nothing wrong with this tape whatsoever. That can change. It will change at some point in the future. But right now, taking the market at face value, we do our assessment as the umpire calling balls and strikes. There's nothing wrong with the market. The trend is your friend. Very difficult to fight a trend. No real change on the weekly chart. She's just grinding up. Did not close at a new weekly high, but made a new high. There's no difference. She's extended from the 20-period moving average or home base. Doesn't mean she can't go farther. And here's the rub. In about a week or so, on April 8th, we have a tinfoil hat event, a full-on solar eclipse. Markets have a tendency to trade up into these important events and trade or reverse back out of those events in the other direction. Doesn't mean it happens every time. If the market's trading down or the market's trading up, our antenna is up. If they're at an important place or putting in a sign and or signal of a trend change, that is our clue. That's a hint. That's evidence that we're going to look very closely at a potential change in trend situation. For now, she's grinding up and we take the market at face value. By the way, since we have a monthly close, I will mention again that the month of April represents an on-time type of situation. That does not mean that the market turns on Monday. What it means is the month of April represents an on-time type of situation. Write that down, put it on a sticky note. Our eye is on the 8th. We'll see what happens. Doesn't mean they will or will not turn before that. Our eye is on the 8th until proven otherwise. By the way, this was the last trading day since we had a 3-day holiday weekend or have a 3-day holiday weekend. Market is closed on Friday. This will be the last video of the week. We'll be back in uniform on Monday, ready to go as an of note side conversation. What about inside the numbers? Here's the commentary. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. Double check the numbers. Are these numbers accurate? Does something happen at these numbers? Let's take a case in point. We'll use 523.35 as our pivot today. Right of the vertical is today's activity. Here's a 5-minute SPY chart, and you can certainly see what happened today. It's pretty clear. The market vacillated around the pivot all day long, tried to break up at the end of the day, gave it up into the closing bell, finished not too far from the pivot. So all in all, nothing really happened today. Sure, we had a small short trade in the live room off that number, down 4 or 5 points. That's 4 or 5 S&P handles, ES points. This week, we were very familiar with these long eating time off the clock segments during the trading day. We had one today. We had one on Wednesday. We had one on Tuesday. What normally follows a lower volatility market, lower participation, is a higher volatility market, higher participation. It's coming. They didn't really get too far from the pivot. The all-time high was, and this is just from last week, 524.11. They spiked that at the end of the day and pulled it back. They never got to the lower numbers. It was just another mush market, but nevertheless, We come back each and every day, give it our all, give the numbers, give our analysis. It's all in here each and every day. If you want to be successful trading in the SPY, the S&P 500, ES, options, exchange traded products in the S&P, this is the place where you get the valuable information each and every day. Comes with the numbers, comes with the commentary, comes with a little levity, comes with bona fide information. What about stocks on the move today? Did we have anything going on over there? We had 3 potentials on the board. One of them hit, 2 did not. The ones that did not, they're off the board. There are no trades. However, PLTR, Palantir, did hit. The number was 2353. Let's take a look at the chart of Palantir, PLTR. Here's a 5-minute chart, 2353, came into the number, ricocheted off of it, gave us the trade, the base hit, and then some with potential. Not that much potential, but they certainly got almost up to $24, which represents about 2% on a bounce in a matter of minutes. Plenty of participation in the live room and inside the numbers in Palantir today. Nice way right out of the gate to go into the 3-day holiday weekend, putting a profit in our pocket, puts us in the driver's seat for the rest of the day. Whether or not an individual trader takes or took another trade from that point, you know you've got a lead on the day. You can pack it in and say, I'm going out on the weekend with a high note. I'm not going to get that sour taste into my market and give the profit back. That gave us that opportunity this morning. Nice trade in Palantir. What have we got going today in the IWM over in Camp IWM? Well, they made a new recent high also in IWM today, put in a little bit of a tail candle. The main thing is, above all the moving averages, the trend is your friend. The tail candle was not, and I repeat, not accompanied by a big spike in volume, so we're not going to look at it right now as a reversal candle. It's just a little tiny tail. It's like a stubby tail. Big picture in the IWM is she's in an uptrend. This is the weekly chart. She's headed for the next big time important spot, which is 216. There's stuff in between from a day trading perspective, but she's heading for 216 from a big time frame perspective. Where does that begin to change from a charting and trading and investing standpoint? It begins to change if they get below the 20-period moving average and can't recover. That opens the door down at 202.15, give or take, and lower. Write that down, put it on a sticky note. What about the folks down at the transportation department? Jammed them up today a little bit, up over 1%. Now, what they did today was, after missing this gap on purpose up here by just a few dollars in a $16,000 index, they pulled back, came back and got it today. This is just nonsense, intraday, daily noise. What we're looking at from a bigger picture perspective, taking the long view, taking the big picture view, is we have a bullish situation, eating time off the clock, coming out of this box. She's going to run a test of these highs over here. Doesn't guarantee she comes out of this box in the northern direction, but that's what's going on. We take the market at face value. We are the umpire calling balls and strikes. What about the Q people? Q people were down a little bit today, not much, 0.2%, but they were still down, but they are above all the moving averages. Trend is your friend conversation. They're eating time off the clock in a bullish sideways type of formation above all the moving averages. Just because they had a little bit of a red day doesn't mean this isn't bullish. They're winding up, building energy for another move higher until proven otherwise. Where does this change? Below 439 on candle closes, daily close below 439, and they can open up the door for lower prices. Write that down, 439. Could even make it 438.5, give or take. Let's go off the beaten track for a moment. We had a discussion today in the live room about wheat futures. Why is that? And this can be traded using other vehicles, exchange traded products and such. However, the reason that I wanted to bring this up is because I saw a very interesting analysis on the relationship between wheat and another vehicle, another market within the commodity sector. And what it said was, and the numbers were clear and the proof was there, the analysis was done using data. Net, we're not going to be surprised over the next several months if wheat begins on a trek up and has a long-lasting rally. Well, that being said, whether that's true or not doesn't matter right now. What they did do is also important. They spiked a low and they ripped it back up in the other direction at the monthly close to close the month above the former low. This is what I'm talking about. This little tail candle here, they spiked this low here. This is a monthly chart, long-term stuff. So they spiked the low, they ripped it back up in the other direction. As day traders know from Inside the Numbers Live, the live trading room, they know that that's one of my favorite trade setups intraday. Not all lows are made the same. They're not all equal. However, there are characteristics for a chart setup that make some better than others. This is one of those times. So now let's put a number on the board. 595. If they can get back above, recapture 595 and stick. Daily closes, weekly closes. This is a long-term thing, but all charts act and react the same way. We just happen to be looking at a monthly chart. They can close daily, weekly, monthly above 595. You could be off to the races in wheat. Write that down, put it on a sticky note. We're watching. Financials. Closed at a new high. You see the daily chart here, closing at a new high, uptrend. The highs are not important, for example, on a day-to-day basis because it's continued to make new highs. You look at this monthly chart, making new highs from a shorter-term perspective, but now they just made an all-time new high and closed above. This is the all-time high in XLF. And remember, April, the month of April, is an on-time type of situation across the board, across the equity board. XLF, financial complex included. However, we have to look at the present day stuff and say, is there anything wrong with the XLF? Is there anything wrong with the financials? No. If there's nothing wrong with the financials, there's nothing wrong with the overall structure of the market until and unless there is. If the financials crack, something is changing. As long as the money is flowing into the financials, there's no fear of any kind of situation going on. Fed, inflation, deflation, masterflation, it doesn't make any difference. As long as the financials are doing fine, nothing wrong with the structure of the market. Smashmouth was flat, pulling back into the 20-period moving average. Again, same rules apply from last night. It's a move up. It's a bullish, flaggish, consolidation-ish, eating time off the clock-ish pattern, building energy for another move higher. Where does that change? Start leaking below and stay below. Close daily below the 20-period moving average, and that changes. While they're above, that doesn't change, and they can still run a test, challenge the breakdown candle high, the high area, high 20-25% of that candle. 235 is up there, give or take. That's an area that they could reach coming out of this bullish type of situational event. Weekly chart, obviously, traders can be and certainly are short against this pivot high here. This is a tail on volume. We've talked about this many times, but they're eating time off the clock. They have yet to be, meaning they have not been rejected from that high. They've pulled back, but they're hanging out. That's still bullish regardless of the reversal day, regardless of the reversal week. You have to take the market on what it's been doing in real time of late. Just because a few weeks ago you have a tail candle, a reversal week, a sign or signal of a trend change, that's fine. But now you fast forward 3 weeks and they haven't done anything but go sideways. What does that tell you? Nobody's selling the stuff. There's no money flow out of these things. You take it at face value until something changes. And with that, we're going to wrap the week. We're going to pull the ripcord. Have I told you, by the way, how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're going to pull again the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks for tuning in to another episode of Common Sense Market Analysis.